Hey everyone, this is Ryan Mallory for SharePlanner.com. Hey, the market's going up today. It's great. We had a nice breakout yesterday from the consolidation that we have been stuck in for a long time. I'm not a huge fan of this market. I still feel like this market's just a pile of crap. Quite honestly, if you really want to know what my ultimate opinion is in regards to its true value. However, I can't let that get in the way of me being able to make money in my trades, because if I let that opinion of the market dominate how I traded in the direction of long or short, as a result of that, I would lose a lot of money in the process. I'd constantly be short, and I would constantly be getting stopped out of position. So I have to put my whole personal bias aside and trade exactly what I'm seeing. So right now we're seeing the S&P go outside of these Bollinger Bands. I'm not going to be adding any trades today because of that. You're starting to see too on the 5-minute chart where the S&P is trying to do a little bit of a double top maneuver here. We've seen some selling off of the highs. Quick order, we dropped about 5-6 points. Not a lot in the grand scheme of things. That doesn't really bother me that much. But it's not surprising, because look how far outside the Bollinger Band we are. We have an entire candle body that is trading outside of it. When I see that, there is no way on God's beautiful creation that I'm going to start piling on the long positions. You can go back here in history and just see what this market has done when we get well outside. I mean, you can see here back in December, we got a little bit outside of it and we sold it off. We got outside of it beginning in January when we had that huge surge to start the year. We didn't pull back, but we did consolidate for about a good week. So the thought that the market's going to just keep on pushing higher, higher, and higher in the days ahead is really not likely. Here's a perfect example of stock pricing getting outside the Bollinger Bands. It leads to a pullback. Maybe it's just one day, but even if it's just one day, do I really want to buy a stock when I think that the odds are that the market's going to pull back? Not really. So once again, another full body outside the candle leads to about a consolidation and then a heavy sell-off back in September of 2012. So, and this really is a concept that I apply only to the long side. To the short side, the market can, we haven't seen a sell-off in a long time, but when it does happen, it can run outside below the lower Bollinger Band for quite a while. But that's not really pertinent to today's discussion. So we got the Bollinger Bands finally, after that consolidation period when the Bollinger Bands did tighten. We're popping back outside of them. It's going to lead to an expansion of the Bollinger Bands, which will be healthy down the road in the weeks ahead, because we'll start seeing those Bollinger Bands start probably at a max expand about 7 to 8 points a day. But if we can get some consolidation here and get maybe some sideways price movements, we might be able to get some stocks to pull back some and get them on a good opportunity or at a discounted price. Stocks like DISCK that has broken out, but I'm waiting to get into those on a pullback. Monsanto, another stock that I would like to get into if the price is right, and a few others. But on this market though, I have to be patient here. I've already sold out of one of my positions, E&I. The stock didn't do anything over the last 2 days. While the rest of my portfolio went higher, E&I just stayed flat and actually gave back some to the market. So I scratched that one from the portfolio for like a 0.5% gain. But the rest of my swing trades are doing pretty good. And I've tightened up nearly every one of the positions, all but one of them. I've tightened the stops on, because if we get a bigger pullback than what we think, I don't want to be in a position to where I lose more money than I think I'm going to lose. So playing it cautious, tightening up the stop losses. Personal biases aside, I have to play what the market's showing me. It is trending higher. It is breaking out. However, the caution over the next few days here is that we may see some consolidation, maybe even a slight pullback. And as a result, I want to be careful about adding to my exposure to the long side. That's going to do it for today. If you guys have any questions, comments, thoughts, shoot me a line at ryan@shareplanner.com, or feel free to join us in the Splash Zone, which is our premium membership site, where I am in all day, every day when the market is open. Y'all take care and God bless.